हेलो फ्रेंड्स, वेलकम टू माय चैनल। दिस इज सीए राखी अग्रवाल। का हमारा टॉपिक है इंडियन अकाउंटिंग स्टैंडर्ड 109, 107, 32 which talks about financial instrument part 13. We had already completed our standard. Today I am discussing only the disclosure of the standard, which is the last session for this standard. So today we are going to discuss the disclosure of this standard, that is the financial instrument. Now we are discussing about the disclosure of financial instrument, that is IND AS 107, which talks about how to disclose the financial asset, financial liability and equity to be disclosed on the face of balance sheet and in the notes to accounts. So we will discuss disclosure of financial instrument, that is IND AS 107, which we are going to discuss as financial asset, financial liability and equity, which to be disclosed on the face of balance sheet and in the notes to accounts. Under financial asset, following disclosures needs to be made. That is, financial asset recognized at amortized cost is to be disclosed. Financial asset which is recognized at FBT OCI is to be disclosed. Financial asset if recognized at FBTPL is to be disclosed. Financial asset designated at FBTPL is to be disclosed. Now under financial liability, following disclosures needs to be made in the financial statement, that is financial liability recognized at amortized cost, financial liability recognized at FBTPL, financial liability designated at FBTPL. So these are the disclosures which is related to the financial asset, financial liability. Now we are going to discuss about the financial asset, financial liability and equity to be disclosed on the face of the profit and loss account. Previously we had discussed the financial asset and liability which should be disclosed on the face of balance sheet. Now we are discussing the disclosure part of financial asset, financial liability and equity to be disclosed on the face of profit and loss account. Now impact in the profit and loss account as other income. So impact in profit and loss account as other income. Upward change in the fair value to be recognized in the other income. Now any upward change in the fair value to be recognized in the other income. Unwinding interest income. So unwinding interest income is to be recognized in other income. For example, security deposit discounting. Any security deposit discounting, debtor discounting is an unwinding interest income. Any difference between the carrying value or the fair value is the interest income, which should be recognized as other income. Any upward change in the fair value of the asset or liability is to be recognized in the other income. Impact in the profit and loss account as expense. Downward in change in the fair value to be recognized as expenses. Any impairment loss is to be recognized as expenses on the financial asset. Finance cost at of effective interest rate on loan accounting uh, is to be impacted on the profit and loss account as expenses. OCI related disclosure, any change in the fair value of debt instrument to be disclosed, any change in the fair value of equity instrument to be disclosed, accounting policy on following items to be disclosed, like measurement principles, initial recognition and subsequent recognition. Disclosed as accounting policies, like any measurement principle, both initial and subsequent, is to be disclosed as accounting policy. Any classification, like if it is classified, financial asset is classified at amortized cost, FBT, OCI, FBTPL, it should be recognized as classification is recognized as an accounting policy. So financial liability, if recognized at amortized cost or FBTPL, any classification is to be accounted as an accounting policy. Reclassification is there, need to be disclosed. Any derivative transaction needs to be disclosed. Transaction cost needs to be disclosed. Derecognition needs to be disclosed. Any derecognition if happens of financial asset liability, or then it is treated as an accounting policy and it should be disclosed. Debt for swap. If any debt instrument is swapped to equity, like we had discussed the case of debt for equity swap, it is also treated as an accounting policy and it should be disclosed on the notes to accounts. So expected credit loss, we had discussed the concept of expected credit loss. It should also be disclosed as an accounting policy. Recognition of financial instrument, recognition of compound financial instrument, recognition of hybrid financial instrument, treasury share accounting, offsetting accounting, dividend accounting, all should be disclosed as an accounting policy. Now, comparison of fair value of financial asset, financial liability and equity with their carrying value to be disclosed. Offsetting of financial instrument. Amount of financial asset and liability is to be offsetted. Amount of set off and net amount to be presented. So amount needs to be set off, and gross amount of financial asset and financial liability needs to be disclosed, and it should be offsetted with each other, and net amount is to be presented on the face of the, it should be disclosed or it should be presented on the notes of accounts or balance sheet. If any financial asset or liability gross amount is to be disclosed, it also needs it is also set off with each other, and net amount is to be presented. Thanking you for watching my video. If you like, please share, subscribe my channel. I had completed this standard financial instrument 109, 107, 32. I hope you guys are able to understand the way I had delivered my session. If you like, please share, subscribe my channel. Thanking you for watching my video.